Good afternoon, everyone. Allie Corman, Ed Carson here with a look at the stock market today. And the tricky year that has been 2021 continued with its tricks today, Ed.
Yeah, it was not a very good day today, especially for tech stocks like Nvidia, which was one of the big winners on Wednesday. Were some stocks that did well, and including Alcoa. And we're also going to take a look at, I don't know, something else, and it's just not been one of those days that a few stocks are holding out, but that's about it in this kind of market.
Okay, well, let's break down what went down in today's session. Starting off with a look at the Nasdaq composite, which I will pull up here now. So here's a look at the Nasdaq, down about 2.5% today. We also had the S&P 500 down at 0.9%. The Russell 2000 down 2%, and the Dow finishing with a slight loss, down about 0.1%. So after a follow-through day on Wednesday, this is not the inspiring action that we wanted to see today, Ed, following up on that.
Yeah, we wiped out all of the gain from Wednesday on the Nasdaq, and it was really pretty powerful stuff. A lot of stocks coming right back down. A rally is technically in effect until we undercut the lows. I mean, if it goes on for several weeks, at some point we don't care about that anymore. But early on, that's what we care about. So, okay, we definitely didn't do that. If we had closed below yesterday's low, that would have been a very bearish sign. I mean, especially given how low in the rally it is. This still was not a positive sign. It was really to wipe out the gain like that. That is really a positive for the future. It also means it's pretty much anything that you bought yesterday, certainly on the tech side, probably is now at a loss, and maybe at a significant one. Just really not the kind of action you want to see.
Right. So a couple things here. When we do see a follow through day, yes, that is an encouraging signal about a rally and an uptrend, but that doesn't mean it's a fail-safe signal. We talk about adding exposure gradually, but waiting for further signs of continued strength before really starting to wade back in. So definitely don't want to be pressing it hard on that follow through day, and this shows it exactly why. And it doesn't mean that the rally attempt is over, but very wild volatility that we've seen in the last couple of weeks continuing.
Yeah, and Ken Shreve said on IBD Live, he said this early on when the market was still looking okay. Not a lot of great looking charts out there, especially on the growth side. Definitely not now. But even then, so that was another reason. There wasn't a whole lot of reasons. And we saw the advanced decline line. There was a lot of reasons to be wondering, even yesterday, hey, be cautious. So yeah, here's the advanced decline line. That's up through yesterday. Presumably it fell sharply today. We know the losers crushed the winners once again today. That's been a real negative sign. So just a lot of reasons to be cautious even before today's sell-off. And definitely something where I think people should be waiting now to see if we can, buck up again before, stepping up exposure significantly, especially on the growth side.
Yeah, how leaders are acting, that's definitely a tell to what active growth investors should be taking a look at. And let's also just quickly check out the S&P 500 here. So a downside reversal, but not quite as much damage as we're seeing on the Nasdaq. Look at the Dow here. So a slight loss today, but a reversal as well below that 36,000 mark. Small caps continuing to struggle pretty significantly here. So still around the recent lows. And then let's take a look at FFTY, which tracks the IBD 50 list of growth stocks. So a reversal here, which sent FFTY down 3.4%. So pretty brutal out there.
Yeah, and it all shows in that breadth, and there's not even much leadership. It was really just coming down to a handful of stocks in the last couple of weeks, and this really shows it's really hard to make headway when growth stocks are acting like this.
Right. So speaking of, Nvidia's action was pretty promising on the follow through day yesterday after coming down to its 50-day line, gaining 7.5% on Wednesday, but today down almost 7% here, Ed, getting resistance at that 300 level, the 21-day line, still holding above the 50-day, but to see it give back that gain yesterday is not a great sign.
Yeah, that is not. I mean, it's like Nvidia and AMD, which were pretty much the winners like that were really, they were the big, strong winners recently that had come down but didn't break the 50-day line. And so, okay, so their bounces, that was nice to see. And then their bounces, okay, this is really something. And so to see these bounces essentially get wiped out, really, really discouraging, because this is one of the ones you really want to see do well, and it's just not doing it here. And we saw it with a lot of stocks, so there was nothing really unusual about it. Obviously the market had a tough day on the growth side, especially.
And the tricky thing here is, Ed, if you were waiting to the end of the day yesterday to be buying, so buying at the highs of yesterday, now you're down 7%. I mean, that's a sell signal. And the stock is still above the 50-day line, going to the weekly chart. So a test of support right at that 10-week line still in effect here.
Yeah, that's a really good point. Yeah, if you're buying near the top, you might be wanting to scale back out. And definitely, I think anybody who bought Wednesday would, for the most part, is probably thinking, should I be getting out, or at least scaling out? That's definitely, they have to be considering it, certainly as they go into tomorrow.
Yes. And now, on the positive side, let's take a look at Alcoa, which tried to break out of a double bottom base today, finish off of its highs, but still managed a gain of a little over 3% today. So one of the things that I think stood out, at least earlier in the session, was the strength, relatively speaking, that we were seeing in some of the, these cyclical and industrial plays like Alcoa.
Yeah, metals did very well, steel and some others, and this one doing this one was one of the best looking ones. It still had a solid day, and though it closed well off highs, but with the market coming off and closing definitely near the lows, hard to resist that. And that's part of the problem when you have a sector rotation or a split market. Can you really count on those holdout sectors to stay strong? And we'll see. If the market bucks up, maybe it just follows through on its breakout tomorrow. And that would be a positive sign. It closed just below that level. Just have to see how much conviction do you put into anything right now. But this is definitely, it's nice to see this in the sector, commodities in general, doing relatively well today.
Okay, and Schwab also was on the move today, up about 2.7% in above average volume. So clearing an early entry by way of a declining tops trend line here and rebound off of the 50-day line. Also trying to break out above an 84.59 buy point. So finishing off of highs here, but a move higher. So that definitely is worth discussing.
Yeah, and you could have bought it, as an early entry even before it broke out, and it's holding up there reasonably well. The relative strength line is perking up nicely. There's nothing like the market tanking and you going up 3% to see the RS line pick up. Will this continue? It's got accelerating growth, especially on the revenue side. It seems like people are turning to this and some of the traditional online brokers and away from Robinhood. So that's a positive. This was looking good. A lot of financials looked good today. So, these are areas that you may want to watch. How much do you want to step in? I don't know. That's just a question. And if you do step in, be ready. You should know going in. You should always know going in, but especially in this kind of situation, know what you're going to do if you want to get out. Where are you getting out?
Oh, yes. So there's a lot for investors to digest right now and wrap their heads around after the encouraging signal that we got in Wednesday's session with the follow through day, getting slammed pretty hard today. So new buys, how should investors be handling that? So it sounds like if you do want to make new buys, be scaling out or keep a very tight leash on them at this point until we do get more improvement in the market.
Yeah, and you just have to be very flexible. Just as we were talking about, you have to shift from a bearish to a bullish stance yesterday because the market was telling something. Well, it's telling a different story now. And is that temporary or not? We don't know, which that in itself is not a real reason to have too much conviction in jumping in. So definitely be looking at that portfolio, keeping a tight leash, maybe just scaling back exposure especially if we get any weaker from here. And it's definitely a tricky market into the end of the year, it seems like.
Right. And that flexibility goes both ways, right, Ed? This doesn't mean that, you're going to step away, close your eyes till the end of the year. There's no way things could get better. I mean, there was no one like IBD founder Bill O'Neill in terms of his flexibility and being able to turn very quickly, given what information the market is presenting at that moment in time. And so I think that that's our job, is to just stay on top of that information that the market is presenting us.
That's exactly right. So we just have to see what the market's going to do tomorrow.
All right, we will. So we hope you join us the first thing tomorrow morning on IBD Live. We'll be breaking down all the latest. So we hope you tune in and interact with us there as well. Investors.com/IBD Live for all the details. And we'll be back after the close with our Stock Market Today wrap up. And we hope to see you there as well. Thanks, everyone. Bye.